Bitcoin bears are running out of options. Do they have any foreseeable future in the shorter time frame or even in the medium time frame at a later stage? I must say, this seems like it is the end for them because with any corrective pullback scenario like you see here, and even trying to force any bearish idea to the downside, there just seems to be no more options left for a deeper pullback. This is, of course, using the process of elimination utilizing the Elliott Wave theory, which I specialize in. And it shows us no emotional bias attached. We just have no more scenarios left. There really is no option left. So with that being said, I think we can finally narrow it down to one last high probable scenario for us to create this final distribution zone for this wave 1-2 that we're looking for before moving to the upside. We have two scenarios left that I'll be explaining in just a second. Now, if we look back and why we're kind of looking for this to be a distribution zone right now is because back then we were looking for a 5-wave move up, and we do have a pretty clean 5-wave looking structure to the upside. I think it's very clear that this is objectively a 5-wave impulse to the upside, and there hasn't been any strong distributions on the way up. In fact, it's quite the opposite, where we saw a very shallow wave 1-2. And what's important about this is that if this was a corrective structure to the upside, where the bears had a chance to create this as WXY to the upside, there was just no time to create any meaningful distribution zones in time. This in translation created a very clean 5-wave move up for this kickoff stage, as we like to call it, on the macro. And right now, if you pull up the actual wave structure, this is the idealized structure that we're looking for any kind of impulse wave to the upside. In fact, it's quite textbook if you ask me. This looks very clean as a 5-wave move to the upside. And with that being said, we have to take that preceding waves of these 5 waves for the larger wave 1 to use that conviction that we're now looking for any kind of corrective pullback to be bought up and kind of assuming that this is going to be just a wave 1-2 before moving to the upside for a larger wave 3. So how do we achieve that? What kind of patterns can we get out of this? The only two sub patterns that we can get out of this is using this equilibrium zone since we breached the previous high over here, since our wave 1 is being terminated over here after this 5-wave move has completed. Right now, the two subcategories is narrowed down to what is known as a running flat, where price, if we do get supported above this level over here, we get a protected low. This could be used as a running flat where we have an extreme price B, but no follow-up for this wave C where we stay above this previous low and we go for further higher levels. Or the more commonly seen pattern within the crypto markets is an expanded flat. And that's kind of what I'm also seeing as well. But again, we don't know exactly what's going to happen. What's important is that we should be focusing on this expansion phase. And the expanded flat idea is going to be bringing us down to the most commonly known target as the 161.8% Fibonacci extension target, utilizing the origin of the wave A, termination of wave A, and the termination of wave B. And that should give us that target zone of around $99,000 to the $100,000 levels, right on point. And more commonly, less common target is at 261.8%. And even then, it's going to be extremely bullish because that we do have another cluster support zone over here. So that is how I'm seeing it right now. Those are the only two scenarios. And what's great about this is that I think a lot of my colleagues are seeing the same thing. They're really trying to build upon my idea as well. And it's fantastic to see because they also utilize different theories in their trading regimen as well. And one person that's kind of a student of the Elliott Wave theory is Lucky Chart Ape, and it's great to see that he's also seeing some kind of running flat idea as well. So you can see a lot of these ideas are clashing together, and we can see that we're also seeing some kind of a larger distribution being created before moving to the upside. And that's exactly what we're talking about here, ladies and gentlemen. You can see that we have a larger corrective structure possibly being built here after a 5-wave move. This is extremely healthy and arguably so very vital to the markets. We do need corrective pullbacks, but right now, since we are also assuming that we're in a bull market of an extended 5th wave, if we pull up the macro here, and why my conviction still remains the same, is that we're looking for an extended 5th wave to the upside. Now, a lot of people won't agree to this, but I've already given my evidence on this because I do tie in the fundamentals and a lot of the evidence that has happened in the past utilizing the preceding waves. And right now, we were ahead of schedule within the macro for this wave 3. And I think a lot of people were disappointed in this wave 3, the actual move of this. So it's pretty fair to say because of the follow-up that we had here with this internal structure, we had a clean 5-wave move up. And right now, the only way we can organize this is that this goes into a wave 1 because there's really no way we can create a larger distribution zone that could be creating a far larger move to the upside. And I think that's just not likely the case. I think it's pretty clean to say that we had a corrective pullback as a WXY said, as an intermediate degree wave 2 completion. And this move here was the icing on the cake, basically. We had that clear 5-way move to the upside, and right now all of these distribution zones are going to be met with buys. I think with every corrective pullback, like I said, especially if we're assuming that this is a 5th wave, we want these 1, 2s, and 3, 4s to be as shallow as possible. So right now, I do think that we are working for a wave 3 of this 5th wave, and in my opinion, should be far more profitable than the actual higher degree primary wave 3, because a lot of people were disappointed. And it goes back to the roots of what the Elliott Wave Principle teaches us. It's stated within the literature as well that 5th waves are commonly observed to be extended within commodity markets. And commodity markets, lo and behold, Bitcoin best fits as a commodity in my opinion, just like gold. And gold has also witnessed a very strong move to the upside as a 5th wave to the upside, right? So gold might be also experiencing an extended 5th wave, and right now it's very uncommon. It's very uncommon for gold to be extending right now, right? Especially during times of uncertainty. So there's a very good assumption to be made that Bitcoin might be following gold's lead as well if we're really trying to tie in what asset it is correlated to the most. We do see it flip-flop back and forth with different assets. Traditionally, we were more commonly seeing Bitcoin being tied to the dollar, but then that got disconnected. We saw it connect with the S&P 500. That got disconnected within the past few weeks. And right now, gold is leading us into finally giving us some clues that this also may be extended to the upside, since gold is also a commodity in itself. So again, this wave 3, since it was ahead of schedule, the only way that we can be achieving this is an extended 5th wave to the upside if we're using our organizational skills with logic being applied. And again, the reason why I'm seeing an extended 5th wave is because if we look at the actual halving cycle, again, fractals are very important. It's what the general markets see. And I think that's a big missed opportunity, because a lot of people think, oh, this is the first, we're going to see a bear market happen now. This is the first time. But ladies and gentlemen, we have 10 years of data. We had wave 3, 4, 5 after each halving cycle, 3, 4, 5, 3, 4, 5. We were ahead of schedule for this wave 3. It happened before the halving cycle. But one thing that's very important that a lot of people are seeing is that the slope is missing, right? You can see the slope. It would be very strange for having this slope end very early. So in order to fulfill at least some meaningful slope to the upside is via an extended 5th wave. And I think that's why with all the preceding waves combined, this 5th wave continuation should be happening. And again, to conclude this video, I just want to say to the bears that you're not wrong. I think the bears are not wrong with their thesis. I think they're just wrong with the timing. And that's the most kind of unfortunate thing to happen right now, because it's absolutely okay to make a thesis about a bearish pullback, but I think the timing of it is wrong. And with all the evidence combined, I think with this right here, when we get to that $200,000, $300,000 regions, that's when we'll get the actual pullback, because you best believe that I am also going to be following the trend. And that's the most important thing. Follow the trend. The trend is your friend. And when we get that larger pullback, first steps we get that for the pullback, I think that's when we'll see a massive pullback down to the possibly $20,000, $30,000 regions before, continuing that fractal idea. And of course, we will be making adjustments along the way in terms of how this actual trend is going to be developing, because things can change, of course. But right now, since we do have a decade worth of price history, it's quite safe to assume that, cycles are going to rhyme. Of course, past price action is not indicative of future price action, and that's what we're seeing because this wave 3 was ahead of schedule. But I think the slope of it is kind of missing post halving cycle of this 4th cycle that we're currently in. So that's how I'm currently going to see the markets right now. I think that we're seeing it a little bit higher, in my opinion. I think it's going to be a little bit more bullish than anticipated, in my opinion. I think a lot of bulls are even anticipating 120, 130 levels to take profits, and that will be the end of all things. Nope, not in my opinion. I think we're going to see it even further. And I think that's why a lot of people are possibly going to miss out on the most profitable run, which happens after the cycle, and we didn't get that right now. So hopefully that was helpful, ladies and gentlemen. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.